Welcome back, guys. Today I will be talking about the top cloud stocks to buy currently in the stock market and which stocks present the best opportunity to buy. So let's get started. First, let's talk about one of the hottest cloud stocks in the stock market right now, Fastly. As you can see, it has quickly dipped in the past week as it's down near 30% on the 1 week chart. However, it is up over 125% on the 3 month chart and is well above 300% on the 1 year chart. As you can see on the IPO last year, it was at $16 and now it's at 78, and it did touch 120 last week. So what is Fastly? What did they do? And why did they go up so much? It's essentially a cloud computing company. However, they do have strong partnerships with Amazon, and Fastly is even beating Amazon's cloud computing services. And why has the stock massively rallied? Because for the first time ever in the company's history, it is profitable. As you can see in Q2 of 2020, they reported a profit of 2 cents per share. Even though it's not too much, this is a growth company. The P ratio on the stock is well above 300, but again, if it's a growth stock, it does not really matter. It has gone up 7x since the March lows of $10.63. In terms of buying Fastly stock, that's up to you, but personally, I think the valuations are way too rich for Fastly. I would like to see it come down to at least the 40 levels. But it is a growth stock. It can go up to 200, but it can also go down to 20. So you're not really sure. But in terms of a market share, Fastly is quickly um, gaining steam in the cloud computing area. Now let's talk about another stock. Now let's talk about Cloudflare. It is down around 8% on the day, down around 13% on the month chart, and is up around 103% on the year chart. This company also IPO'd last year at $18 a share and has quickly gone up over 100%. It has a market cap of above 10 billion and is a pretty fundamentally strong company. However, they have not turned a profit since being public on the stock market. They also do cloud-based services. However, they are not essential cloud computing things. For example, they do video streaming performance and advanced security. However, Fastly protects um, data, and they make sure that the cloud performing services are available to high-end customers. Cloudflare is yet to get multiple high-end um, partnerships, unlike many other companies we will see on this list. However, I believe they have great growth potential as they are in talks with several companies, and their earnings were really good as they did beat expectations by 100% as seen on the screen. And the really important thing is that many hedge funds own the stock. I personally bought this stock when it was around $19 a share, so I will continue holding this share until a fundamental thing arises which questions whether the stock should be held or not. Now let's talk about Crowdstrike Holdings. As you can see, it's down around 4% on the 1 day chart, it's down around 17% on the one month chart, and is up around 3% on the 1 year chart. And since its recent IPO, it is up around 187% with an IPO price of $34 a share. This is one of the bigger companies, I would say, in cloud computing business, which is relatively new, 21 billion. They are profitable since Q4 of 2020, which is great news. I like CrowdStrike personally and have a position at around $55 a share and have no intention of selling soon. The thing I really like is its SaaS subscription-based model. It targets multiple streams and multiple areas, including security and other sectors as well. The reason I like Crowdstrike Holdings is because it is also endorsed by famous investor Kevin O'Leary. So as you guys know, he's a very stingent investor, and him liking a non-dividend company is quite interesting. And it is also owned by several hedge funds and has a 71% buy rating. In terms of cloud-based services and what they provide different than other companies is that they already had a pretty strong hold before becoming a public company. And on top of that, they have unique patented cloud computing solutions for home security and office security, which most cloud computing businesses, including Microsoft, cannot touch. So that's why I like Crowd a lot. Now, let's talk about our next stock. Now, let's talk about the biggest sole computing stock out there, VMware. Many people don't know what VMware is because it's a very old, relatively old company. As you can see, it's down around 0.79% on the day, down 4% on the 1 month chart, and is down around 10% on the 1 year chart, and up 5% on the 5 year chart. So, what makes the stock interesting? Well, first, it's an established player. And in terms of technicals and fundamentals, it is a very undervalued company. A cloud company with under a PE ratio, 10 PE ratio is quite interesting. The market cap is around 60 billion, and they have always turned a profit in the past 5 years, which is really, really interesting. The thing I like about VMware, it's like the Intel of chips. It's not going to get you much growth, but it is a very, very solid company. They work in software-defined data centers, hybrid cloud computing, and end-user computing. So VMware was here even before Amazon or Microsoft started to jump on the cloud bandwagon. Personally, I don't have a stake vested in VMware, but I do like VMware as a stable cloud business. And they did beat quarter 1 earnings by a pretty good margin, I would say around like 30 to 35%, which is quite interesting. This is a California-based company and was founded in 1999, so you know they have a strong footing in that region. Now, let's talk about another stock. Now, let's talk about Microsoft. Many people don't realize that Microsoft does a lot of cloud-based services and computing, which makes up over 20% of its revenue. As you can see, it's down around 2% on the day chart, up around 13% on the 3 month chart, and is up around 50% on the 1 year chart, and well above 340% on the 5 year chart. Well, this is a more diversified cloud-based company because they do many other things besides cloud. They do have a solid P ratio of around 36, which is not too bad for a cloud-based company. But you have to remember Microsoft's growth may be slowing down since it's already at a $1.6 trillion market cap. Again, they have been profitable for over 2 decades with earnings being very, very well. So you know what Microsoft does. It has many, many, many business and many, many streams. They work with computers, productivity, personal computing, and cloud. So cloud was their recent addition 2011, and one of the cloud servers name is Azure. And Microsoft plans to use Azure for many other businesses in the future. And I don't blame Microsoft for getting into the cloud business. It's too lucrative of an opportunity to miss out on cloud. I personally have invested in Microsoft, but when I initially invested, it wasn't for cloud. But now I can see the cloud applications and see this stock is fundamentally really strong. I bought in at around $170 a share and $150 a share throughout the last year. Now let's talk about a cloud computing ETF. So SkyY is one of the only cloud computing ETFs. It has a market cap of around 4.63 billion, so it's not as big as the actual companies. As you can see, it pretty much tracks cloud-based companies almost to the exact T. Because as you can see, the ETF is down 1.5% on the day, down 3.6 in the past month, and is up around 33 on the year and 146 in the 5 year chart. So if you don't know which sector is going to do, which company is going to have the best stronghold, buying an ETF is your best opportunity. However, they do have a pretty high expense ratio. So that's up to you whether you want to pay the expense ratio or whether you want to bank on several stocks going up like Crowd or Fastly or Microsoft. So the underlying companies in the cloud computing industry is around 50. And again, Microsoft is heavily weighted as it should be. But I really like this for new investors who don't understand balance sheets and PE ratios and PS ratios in investing cloud-based companies. Now let's talk about the stocks which I like the best out of these six. So I have these stocks ranked in order. I have the ETF going number one because it's just a broad sector of cloud computing. And I believe eventually cloud will keep going up because the applications are so much. So I believe Sky ETF is almost a guaranteed win if you hold for over a 2-year time frame. Second is Microsoft due to the diversification of cloud plus computing. VMware because it's fundamentally undervalued and has been profitable for many, many years, so your risk goes really down. Cloudflare due to their strong holding in the California area and their good partnerships. Crowdstrike due to many hedge funds holding it and due to the fact that Kevin O'Leary endorsed it, and seems like a very good investment due to the fact that it's a very strong growth company. Fastly, I have last. It's not a bad company, it's just that it's run up so much, and I don't see anything in the earnings report that suggests that Fastly should be going up at such a rapid pace. Yes, it can go up 100%, but 400 to 500% since March lows does not make sense to me. There you have it, folks. I'm invested in some of these companies, not all. I will be looking to add more positions in probably Microsoft, VMware, and Sky if the price does come down. Thank you guys for watching and hope you have a good day.